आवाज़ क्लियर आ रही है? एक बार जस्ट चेकआउट कर लेते हैं, फिर हम आगे चलेंगे। हेलो 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 हेलो। मेरी आवाज़ क्लियर आ रही है? एक बार जस्ट चेकआउट कर लेते हैं, फिर आगे चलेंगे। ठीक है, तो टेक्निकल एनालिसिस ऑफ द फाइनेंशियल मार्केट बुक हम कवर कर रहे थे। उसके हम 9 चैप्टर में हैं। हमने ऑलरेडी मूविंग एवरेजेस के बारे में कुछ समझ लिया था। लास्ट हमने बॉलिंजर बैंड भी कंप्लीट कर लिया था। नाउ विल कंटिन्यू आवर जर्नी। Many market analysts believe that time cycles play an important role in market environment because these time cycles are repetitive and can be measured. फिबोनाची नंबर अपने आप में एक बहुत इंटरेस्टिंग टॉपिक है। जैसे जो नेचर है ना, फिबोनाची नंबर एक ऐसा नंबर है कि नेचर में सारी चीज़ें, या बहुत सारी चीज़ें आप बोल सकते हो, सारी नहीं भी बोलोगे तो बहुत सारी चीज़ें इसके बेसिस पे अलाइन होती है नेचुरली। तो इसलिए इसकी हम बोल सकते हैं कि वैल्यू है। और अगर क्योंकि क्योंकि इसकी वैल्यू है और फिर ये साइकोलॉजिकली भी अफेक्ट करता है, तो इसीलिए इसकी इंपॉर्टेंस हो जाती है। तो फिबोनाची नंबर को भी मूविंग एवरेज के तौर पे यूज़ किया जाता है। Cover the Fibonacci number series in the chapter on Elliott-Wave theory. However, I'd like to mention here that this mysterious series of numbers such as 13, 21, 34, 55 and so on seem to lend themselves quite well to moving averages analysis. This is true not only of daily charts but for weekly charts as well. The 21-day moving average is a Fibonacci number. Okay, तो ये सारे फिबोनाची नंबर है, 13, 21, 34, 55, ये सब वही है। इसलिए पर्टिकुलरली ये भी बोला गया, देखो द 21-day moving average is a Fibonacci number. On the weekly charts, the 13-week average has proven valuable in both stocks and commodities. We'll postpone a more in-depth discussion of these numbers until chapter number 13. Elliott wave theory को भी हम समझेंगे वहाँ पे डिटेल में। Moving averages applied to long-term charts. The reader should not overlook using this technique in longer range trend analysis. Longer range moving averages such as 10 or 13 weeks in conjunction with 30 or 40 week average have long been used in stock market analysis but haven't been given as much attention in the future market. The 10 and 40 week moving averages can be used to help track the primary trend on weekly charts for future and stocks. तो इतना समझ लो कि जो फ्यूचर एंड स्टॉक्स हैं उसमें हम छोटे टाइम फ्रेम को ज़्यादा प्रेफरेंस देते हैं, और जो नहीं सॉरी जो फ्यूचर एंड ऑप्शन है उसमें हम छोटे टाइम फ्रेम को ज़्यादा प्रेफरेंस देते हैं, और उसके अलावा जो स्टॉक्स वगैरह है उसमें हम लॉन्गर टाइम फ्रेम को ज़्यादा प्रेफरेंस देते हैं. Moving averages are valuable on weekly charts. The 40-week moving average should provide support during the bull market corrections as it did here. वीकली चार्ट में भी इंपॉर्टेंट है मूविंग एवरेज. तो बुल मार्केट चल रहा था, देखो यहाँ पे बुल मार्केट यानी कि अप ट्रेंड में जा रहा है मार्केट. अगर आप इसको देखोगे ऐसे कैसे करके हायर हाइज बनाते हुए जा रहे हैं ना, अल्टीमेटली ऊपर की तरफ ही जा रहा है. देखो ये ऐसे मोटा मोटा हिसाब किताब. तो ये मार्केट अप ट्रेंड में है, तो इसको हम बोलते हैं बुलिश मार्केट. बुल मार्केट, बुलिश मार्केट, अप ट्रेंड, वट एवर यू कैन कॉल इट, वन ऑफ द सेम थिंग. ठीक है, अप मार्केट. तो ये जो अप मार्केट है इसमें जो 40 वीक का एवरेज है, ये जो लाइन है ना, ये वाली लाइन, मैं इसको दूसरे कलर से ट्राई करता हूँ. ये वाली लाइन जो है एग्जैक्टली ओवरलैप तो नहीं करा मैंने, बट हाँ समझ लो ये वाली लाइन जो है पर्टिकुलरली ये वाली लाइन सपोर्ट का काम कर रही है. जैसे सपोर्ट का काम क्या होता है, जैसे ही वहाँ पे मार्केट आता है तो वहाँ से बाइंग आती है. तो जैसे जैसे मार्केट यहाँ पे आया, एक बार ये वाला एरिया से फिर से बाइंग आई है, मार्केट फिर ऊपर गया है, यहाँ से भी फिर से बाइंग आई है, यहाँ से भी एंड यहाँ से भी. सो ये 40 वीक एवरेज जो वीकली चार्ट है उसमें आपका सपोर्ट की तरह काम कर रहा है एक अप ट्रेंड में, बुलिश मार्केट में. सम प्रोज एंड कॉन्स ऑफ मूविंग एवरेज. cool. The great advantage of using moving average, and one of the reasons they are so popular as trend following systems, is that they embody some of the oldest maxims of successful trading. They trade in the direction of the trend. They let profits run and cut losses short. That is the basic crux of trading environment. हमने करना क्या होता है, अपने प्रॉफिट को ज़्यादा से ज़्यादा बढ़ाना होता है और लॉसेज को कम से कम करना होता है. तो ये जो मूविंग एवरेज हैं ये उसमें हेल्प करते हैं. द मूविंग एवरेज सिस्टम फोर्सेज द यूजर टू ओबे दीज रूल्स of providing specific buy and sell signals based on the principles because they are trend following in nature. However, moving averages work best when market are in trending period. Moving averages best तब चलते हैं मार्केट जब ट्रेंडिंग हो, चाहे वो अप ट्रेंड में हो चाहे डाउन ट्रेंड में हो, बट एक ट्रेंडिंग नेचर में हो. They perform very poorly when market gets choppy and trade sideways for a period of time, and that might be a third to a half of the time. सो साइडवेज यानी कि इक्वल हाइज इक्वल लोज बना रहा है, ट्रेंडलेस मार्केट है, तो उसमें ये ज़्यादा परफेक्टली काम नहीं करते हैं. द फैक्ट दैट दे डू नॉट वर्क वेल फॉर सिग्निफिकेंट पीरियड्स ऑफ टाइम हाउएवर इज one very compelling reason why it is dangerous to rely too heavily on the moving average technique. In certain trending markets, the moving average can't be beat. ट्रेंडिंग मार्केट में बहुत बढ़िया काम करते हैं, लेकिन ट्रेंडलेस मार्केट में, साइडवेज मार्केट में उतना बढ़िया नहीं चलते हैं. Just switch the program to automatic. At other times, a non-trading method like the overbought, oversold oscillator is more appropriate. In chapter 15, we'll show you an indicator called ADX that tells you when a market is trending and when it is not, and whether the market climate favors a trending moving average technique or a non-trading oscillator approach. Moving average as oscillator. One way to construct an oscillator is to compare the difference between the two moving averages. The use of two moving averages in the double crossover method therefore takes on greater significance and becomes an even more useful technique. We'll see how this is done in chapter 10. One method compares two exponentially smooth averages. The method is called moving average convergence divergence, MACD. Two exponentially smooth moving averages, two EMAs. That method is called MACD, moving average convergence divergence. It is used partially as an oscillator, therefore we'll postpone our explanation of that technique until we deal with the entire subject of oscillator in chapter 10. The moving average applied to other technical and data. The moving average can be applied to virtually any technical data or indicator. It can be used on open interest and volume figures, including on balance volume. The moving average can be used on various indicator and ratios. It can be applied to oscillators as well. The weekly rule. There are other alternatives to the moving average as a trend following device. The best known and most successful of these techniques is called the weekly price channel, or simply the weekly rule. This technique has many of the benefits of the moving average but is less time consuming and simpler to use. With the improvements in computer technology over the past decade, a considerable amount of research has been done on the development of technical trading system. These systems are mechanical in nature, meaning becoming increasingly sophisticated. At first, simple moving averages were utilized, then double and triple crossover of the averages were utilized, were added. The averages were then linearly weighted and exponentially smooth. These systems are primarily trend following, which means their purpose is to identify and then trade in the direction of an existing trend. तो ट्रेंड के फेवर में आपको बाय या सेल सिग्नल देंगे, उसके लिए प्राइमरली हम यूज़ करते हैं मूविंग एवरेजेस को. With the increased fascination with fancier and more complex systems and indicators, however, there has been a tendency to overlook some of the simpler techniques that continue to work quite well and have stood the test of time. We're going to discuss one of the simplest of these techniques, the weekly rule. In 1970, a booklet entitled The Trader's Notebook was published by Dunn and Huggett's Financial Services in Lafayette, Indiana. If I'm mispronouncing any word, you understand the gist, right? हमको concept समझ में आए वो ज़्यादा important है rather than being the pronunciation specific. The best known commodity trading systems of the day were computer based, computer tested and compared. The final conclusion of all the research was that the most successful of all systems tested was the 4-week rule developed by Richard Donchian. Mr. Donchian, who has been recognized as a pioneer in the field of commodity trading using mechanical system in 1983 managed account report shows Donchian as the first recipient of the Most Valuable Performer Award of Outstanding Contribution to the field of futures money management, and presents the Donchian Award to other worthy participants. More recent work done by Louis Lukac, former research director at Dunn and Haggett, and currently president of Wizard Trading, Massachusetts CTA, supports the earlier conclusion that breakout or channel systems similar to the weekly rule continue to show superior result. Look at ATL. Of the 12 systems tested from 1975 to 84, only 4 generated significant profits. Of those 4, 2 were channel breakout systems and 1 was a dual moving average crossover system. A later, a later article by Lukács and Brorsen in the Financial Review 1990 published the result of a more extensive study done on data from 1976 to 1986, then compared 23 technical trading systems. Once again, channel breakouts and moving average systems came out on top. Lukács finally concluded that a channel breakout system was his personal choice as the best starting point for all technical trading systems testing and development. The 4-week rule. The 4-week rule is used primarily for futures trading. The system based on the 4-week rule is simplicity itself. Cover short position and buy long whenever the price exceeds the high of the 4 preceding full calendar weeks. Cover short position and buy long whenever the price exceeds the high of the 4 preceding full calendar weeks. यानी कि लास्ट 4 कैलेंडर वीक्स का अगर हाई ब्रेक हो जाता है तो आप just buy long and cover short positions, liquidate long positions and sell short whenever the price falls below the lows of 4 preceding full calendar weeks. Okay, it is very simple. तो लास्ट 4 हफ्ते का अगर हाई ब्रेक हो जाता है तो लॉन्ग की तरफ को पोजीशन ऐड कर दो या लॉन्ग की तरफ को जाओ, और अगर लो ब्रेक हो जाता है लास्ट 4 हफ्ते का तो सेल करो. It is as simple as that. The system as it is presented here is continuous in nature, which means that the trader always has a position either long or short. As a general rule, continuous systems have a basic weakness. They stay in the market and get whip short. During trendless market periods, तो मार्केट जब ट्रेंडलेस मार्केट होगा यानी कि नॉन ट्रेंडिंग मार्केट या साइडवेज मार्केट होगा तो उस केस में आप फंस सकते हो, ट्रैप हो सकते हो, विप शॉर्ट में ट्रैप हो सकते हो, बताने की कोशिश कर रहे हैं. इट्स ऑलरेडी बीन स्ट्रेच्ड दैट ट्रेंड फॉलोइंग सिस्टम्स डू नॉट वर्क वेल व्हेन द मार्केट आर इन साइडवेज और ट्रेंडलेस phases. The 4-week rule can be modified to make it non-continuous. This can be accomplished by using a short time span such as 1 or 2-week rule for liquidation purpose. In other words, a 4-week breakout would be necessary to initiate a new position, but a 1 or 2-week signal is the opposite direction would warrant liquidation of the position. The trader would then remain out of the market until a new 4-week breakout is registered. The logic behind the system is based on sound technical principles. Its signals are mechanical and clear cut because it is trend following. It is virtually guarantees participation on the right side of every important trend. It is also structured to follow the often quoted maxim of successful trading: let profits run while cutting losses short. So उस चीज़ को ये कॉम्प्लीमेंट करता है कि आपने लॉस है तो जल्दी से जल्दी काट दो और प्रॉफिट है तो उसको चलते रहने दो. Another feature which should not be overlooked is that this method tends to trade less frequently so that commissions are lower. Another plus is that the system can be implemented with or without the aid of a computer. The main criticism of the weekly rule is the same one leveled against all trend following approaches, namely that it does not catch tops or bottoms, but what trend following systems does. The most important point to keep in mind is that the 4-week rule performs at least as well as most other trend following systems and better than many, but has the added benefit of incredible simplicity. Adjustment to the 4-week rule. Although we are treating the 4-week rule in its original form, there are many adjustments and refinements that can be employed. For one thing, the rule does not have to be used as a trading system. Weekly signals can be employed simply as another technical indicator to identify breakouts and trend reversals. Weekly breakouts can be used as a confirming filter on other techniques such as moving averages crossover. 1 or 2-week rules function as excellent filters. A moving average crossover signal could be confirmed by a 2-week breakout in the same direction in order for a market position to be taken. It is important, so let's go through it once again. Although we are treating the 4-week rule in its original form, there are many adjustments and refinements that can be employed. For one thing, the rule does not have to be used as a trading system. Weekly signals can be employed simply as another technical indicator to find identify breakouts and trend reversal. Weekly breakouts can be used as a confirming filter to for other techniques such as moving average crossover. 1 or 2 week rules function as excellent filters. A moving average crossover signal could be confirmed by a 2 week breakout in the same direction in order for a market position to be taken. Shorten or lengthen time periods of sensitivity. The time period employed can be expanded or compressed in the interest of risk management and sensitivity. For example, the time period could be shortened if it is desirable to make the system more sensitive. In a relatively high price market where prices are trending sharply higher, a shorter time span could be chosen to make the system more sensitive. Suppose, for example, that a long position is taken on a 4 week upside breakout with a protective stop placed just below the low of the past 2 weeks. The market has rallied sharply and the trader wishes to trail the position with a closer protective stop. A 1 week stop out point could be used. In a trading range situation where a trend trader would just as soon stay on the sidelines until an important trend signal is given. The time period could be expanded to 8 weeks. This would prevent taking position on shorter term and premature trend signals. The 4 week rule tied to cycles. Earlier in the chapter, reference was made to the importance of the monthly cycle in commodity markets. The 4 week or 20-day trading cycle is a dominant cycle that influences all markets. This may help explain why the 4 week time period has proven so successful. Notice that mention was made of 1 to and 8 week rules. The principle of harmonics in cyclic analysis holds that each cycle is related to its neighboring cycles, next longer and next shorter cycles by 2. ठीक है, ये अपने आप में सेल्फ एक्सप्लेनेटरी, अपना डेफिनेशन यहाँ पे नहीं समझना है, easy. In the previous discussion of moving average, it was pointed out how the monthly cycle and harmonics explain the popularity of 5, 10, 20 and 40-day moving averages. The same time period hold true in realm of weekly rules. Those daily numbers translated into weekly time periods are 1, 2, 4 and 8 weeks. Therefore, adjustment to the 4 week rules seem to work best when the beginning number 4 is divided or multiplied by 2 to shorten the time span. Go for 4 to 2 weeks. If an even shorter time span is desired, go for 2 to 1. To lengthen, go from 4 to 8 because this method combines price and time. There is no reason why the cyclic principle of harmonics should not play an important role. The tactic of dividing a weekly parameter by 2 or shorten it or doubling it to lengthen it does have cycle logic behind it. The 4 week rule is a simple breakout system. The original system can be modified by using a shorter time period or a 1 or 2 week rule for liquidation purpose. If the user desires a more sensitive system, a 2 week period can be employed for entry signals because this rule is meant to be simple. It is best addressed on that level. The 4 week rule is simple, but it works. Charting packages allow you to plot price signals, price channel above and below current prices to spot channel breakouts. Price channels can be used on daily, weekly or monthly charts. See figure 9.11 and 9.12. 9.11. A 20-day 4 week price channel applied to treasury bond futures price. A buy signal was given when price closed above the upper channel. upper channel के ऊपर closing आई है यहाँ पे. Buy signal was given when prices closed above the upper channel. Prices have to close beneath the lower channel to reverse the signal. तो ठीक है. 4 month price channel applied to S&P 500 index. Prices crossed the upper channel in early 1995. See circle to give a busy signal. यहाँ पे जो upper channel है उसको break कर दिया था, तो यहाँ से up trend गया था market basically, which remain effect 3 years later. 3 साल बाद तक भी वो effect में रहा. A close beneath the lower line is needed to give a sell signal. इससे नीचे जो लोअर लाइन है, इससे नीचे अगर कहीं पे क्लोजिंग आती तो वो सेल सिग्नल का आपका साइन होता. to optimize or not. The first edition of this book included the results of extensive research produced by Merrill Lynch, which published a series of studies on. ठीक है, इसको हम नेक्स्ट लाइव में करेंगे कवर. Let me just take a break for now. Everyone who is here, make sure that you're liking and subscribing to the channel if you're into stock market and trading and finance. We'll meet next time. Till then, stay healthy, stay safe, have fun, take care, bye bye. Thank you so much, universe. Thank you so much, Radharan.